All right, welcome back to Stocklabs market recaps. We're into the second quarter of the year already. Second week of April, or first full trading week of April. So we ended on April 8th, and it was a week that was, sort of back to a lot of the similar action that we've had for most of the year, which is sort of downside action and the market being somewhat dominated by sellers as opposed to buyers. So if we look at how our major indices did, just go to this watch list here. And S&P was down 1.3%. The Qs were down 3.5%, a little over 3.5%. Bad week for NASDAQ again. Even small caps got hit hard, almost 5%. I mean, that's a big down week for them. And then bonds had another worst week of the year. I mean, not even just the year. This is one of the worst weeks they've had in recent memory, really. And the Dow was the outperformer, kind of held flat for the week. Gold hanging in plus 1%, oil flat, even though the action in crude has gotten a little choppier. So we have the government sort of in the markets releasing barrels from SPR. There's the constant news flow out of Ukraine and positioning. I don't know exactly what positioning is. It could be a little extreme and unwinding a little bit, but I mean it's still hanging in there. Flat week for crude. As far as our mega cap leaders that sort of set the tone for the entire market day to day, not great. Facebook was the outperformer. It was down 1.2%. Apple down 2.5%. Big underperformer, NVIDIA down 13%. Semiconductors keep getting torched. There's a real exodus out of the semiconductor sector has been going on for several weeks now. Even Amazon down 5.5%, and Tesla down almost 5.5% as well, and Google getting hit 5%. So, broad selling in all of the sort of popular leadership stocks. I mean, this is not the type of stuff you want to see if you are sort of expecting more bullish action. This kind of tells you that funds, institutions, they just want out of the market. They don't want to, they don't want as much exposure as they've had before. So just something to follow along with. As far as industries go, like we said, the market was dominated by sellers all week and, spanned across most industries. Tech was obviously the big loser with the NASDAQ down 3.5%, but the median tech stock was down 5%. So, tech's been getting hit hard, and it's a lot of it is with the bond market. We mentioned that TLT had a horrible week, and a lot of the main thesis over the years is that if yields are going to stay low, then tech is going to outperform. So now with yields busting loose, we're sort of seeing some of this tech trade really get the screws put to it. But it's just something you got to deal with. I mean, the selling was, all these other sectors experienced it too. Services down 4%, industrials down 4%, healthcare 4%, consumer 3.5%, financials, down 2%. Not horrible, but financials have kind of been struggling a little bit the past several weeks. And basic materials hung in, but marginally down for the week. And utilities were quote unquote outperformer, up 0.5%, flat basically. As far as the subsectors, not much leadership on the upside. In a lot of recent weeks, we would see some of the oil, the oil, energy, commodity trade would dominate sort of these upside over 5% sectors, getting money flow in there, but that has sort of fizzled out this past week, and even the week before a little bit, I think. So we're not even seeing continued rotation into those. Now it's sort of just pretty lackluster across the board as far as the buy side goes. So the only stuff that was leading was random stuff: auto parts stores, wholesale drugs, grocery stores. Not inspiring. On the downside, we are loaded up with semiconductors. So semiconductors have a lot of different subsectors because they're, there's specialized one, there's memory chips, there's all sorts of stuff. Not everyone is, a pure play. Just not everyone's Intel or Micron or whatever. So they're all part of their own thing. But as a whole, all these different semiconductor groups were sort of populating the downside leadership. So specialized semiconductors down 11%, integrated semis down 10%, broadline semis down 8%. I mean, it's bad. So memory 7%, and we've got other ones too, but they're all down 6, 7, 8, 9 double-digit percents, which is not great. And then the rest of the ledger is filled up with all sorts of other stuff too. So we've got 25, 50, 58 subsectors that are all down over 5%. And if you compare that to the upside, we had 3 sectors that were up 5%. So like we said, sellers have been very active in the market. For most of the year, we had the nice rally, from mid-March to the end of March or start of April. But, this is sort of back to the same mode that we've been in for the entire year. So it doesn't look like we're out of the woods yet. But we'll see if something can get going this week. April is supposed to be a halfway decent month for stocks. Actually, it's supposed to be the best month. As far as breadth on the, by market cap, so 1 to 5 billion cap down almost 4.5%. So kind of in line with IWM. 5 to 10 billion down 3%. So still pretty heavy selling. 10 to 50 billion. Okay, down 0.3. That seems weirdly strong, but okay. 50 to 100 billion, down 1%. Okay. And over 100 billion, down 0.6. So it's kind of good that the 100 billion Terra cap range was not down very severely. I mean, compared to the leadership tech stocks, these really outperformed. So if you're in stuff that's very big but not the popular tech stocks, then you might have done okay this week. So we'll keep an eye on that. I mean, some of it is more, I guess, risk off type stuff. You see a lot of healthcare a lot of these big healthcare players, pharma companies, have started to maybe reverse their trends. I mean, we were highlighting for a lot of last year and the start of this year that healthcare has looked horrible, but in the second quarter so far, the very end of the first quarter and in the second quarter so far, a lot of healthcare names have been way more constructive with their price action. So, and you'll notice that this whole first page almost, not all of it, but a lot of it is large cap healthcare. So keep an eye on that as well. In Screener, let's check out what our upside ETFs are going to be this week, or should be. Okay, bullish oil and gas, bullish Russell, bullish this ARK ETF that I don't know the difference between all the ARK ETFs, but this one seems to be related to space. So whatever stocks are in there. Okay, clean energy, volatility, short volatility is bullish. So volatility is bearish this week. And okay, another AI ETF and another energy ETFs. So not a whole lot to go off of here. I mean, some of these are kind of random, clean energy, space, whatever. I mean, it could just be, they could just have they could just be due for a random decent week. We're not seeing anything like semiconductors or just outright NASDAQ or anything like that. So, although Russell is rated bullish and volatility being rated bearish is better than what we've seen recently out of this screen. For a while this screen wasn't populating with hardly anything. So on the downside, okay, so yeah, bearish ETFs this week are going to be Chinese tech, the NASDAQ, Qs. Okay, FAS, which is inverse financials, some blockchain ETF. Wait, let's reverse this. Okay. Okay, this is weird. So is CQQQ inverse? I'm not sure. I know Yang is inverse China, so I don't know how inverse China would be rated bearish, while also a bull China ETF would be rated bearish. That seems incongruous, but okay. So let's look. Something about China. I'm going to assume that these are both bearish. So actually, we'll be bullish Chinese stuff this week. Gold miners. This I think is inverse gold miners. So gold miners should be okay. Okay, something Mexican and blockchain ETF, FAS rated bearish, so bullish financials, and TQQQ rated bearish, so bearish NASDAQ. So, okay, this between this screen, for downside and the upside version, I'm not really sure what to expect this week. It looks like the Russell energy banks and stuff are going to try and maybe stage a rally while the NASDAQ stays somewhat choppy, but we'll have to see how it plays out. So, like I said, overall, April's supposed to be our best month. So keep this in mind. If we keep dipping, into mid-month or so, that seasonally April is supposed to be good. So for these stats to sort of play out, you'd be looking for a bigger rally off any low that gets set in sometime in April in order for this to sort of finish, quote unquote, in line with history. We've got almost an oversold signal on the hybrid side. So this has been flagging sometimes intraday. Now we don't count them for backtesting purposes if they don't close oversold, but we are getting very close to closing oversold. So this will be something that we'll pay attention to, because if we do get a signal that closes oversold, which looks like it could happen maybe early this week, some of these we've seen on, like a Monday or Tuesday hit, and then, we get a couple weeks of solid gains. So that's sort of what, sort of the same playbook that played out in mid-March. We might be looking at that sometime here, second week of April or third week of April, somewhere in there. On the tech side, okay, we have an oversold signal from, this is Friday, so most recent day. And then statistically, oversold 12 months. So not too bad for tech size. It was 12-month oversold signal that I was just looking at. About 75-80% win rate over 7 or 10 days. I mean, bounce isn't that convincing. You got basically between 1% and 2% in the first week, and then up to 3% out 2 weeks out. The hybrid signal is a little better, at least from a distribution of how the gains play out. It's sort of steady increases from from all this. So I'll wait for these. I'd wait for this hybrid 12-month hybrid oversold signal before getting too excited about a bounce. So overall, I think probably you just got to wait a little bit for this oversold signal to hit. Friday closed pretty poorly. Closed basically on the weekly lows. We got a high that got put in on Monday, and then just mostly steady selling the rest of the week and going out on the lows. So it kind of sets up for some continuation earlier in the week, which hopefully triggers one of these signals, and then we can reassess what our plan of action is going to be. But yeah, overall, bad week for the market. No other way to really say it. I mean, if you're trading, you're managing all these positions and stuff. If you're sitting through holding stuff, it's kind of, you're getting some pretty good gut checks here. But yeah, that's about it. We'll check back in next week and see how we're doing. Thanks for tuning in. Talk to you later.